Today, a multi-billion-dollar deal adds to the accelerating trend of Bitcoin miners moving to power AI. Ethereum co-founder Vitalik Buterin warns against voting for political candidates based just on whether they have a pro-crypto stance. And Lumerin CEO Ryan Condron weighs in on how Bitcoin miners have been reacting to the effects of the halving. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto prices continue to move lower, with Bitcoin falling to the $63,000 level as of noon Eastern. That's after maintaining the $64,000 level the day before. Ether dipped to just under $3,400, and Polygon's Matic token dropped more than 5% to 52 cents. Okay, let's talk about the top stories. Ethereum co-founder Vitalik Buterin is cautioning against voting for political candidates based solely on whether they have adopted a pro-crypto stance. Buterin issued the warning in a blog post, writing that, quote, "The game of politics is much more complicated than just who wins the next election, and there are a lot of levers that your words and actions affect." Buterin made the post just as Donald Trump, who's positioned himself as the pro-crypto candidate for president, prepares to accept his party's nomination at the Republican National Convention in Milwaukee. It also came one day after venture capitalists Mark Andreessen and Ben Horowitz told employees of Andreessen Horowitz they plan to make significant donations to political action committees supporting Trump's campaign. In an episode of The Ben and Mark Show, which features the A16Z co-founders, Horowitz said that the Biden administration, in the form of the SEC and the FDIC, has fought them every step of the way by using very nefarious means, adding that the agencies have been losing most of the lawsuits against crypto firms. Fairshake, a super PAC backed by crypto's top companies, is now one of the top spending PACs in this election cycle. Next, BlockFi is expected to start interim crypto distribution through Coinbase this month. The bankrupt crypto lender BlockFi made the announcement in a series of posts on X yesterday. BlockFi said that, quote, "The distributions will be processed in batches in the coming months, and eligible clients will receive a notification to the BlockFi account email on file." It went on to say that non-US clients are unable to receive funds at this time due to the regulatory requirements applicable to them. BlockFi filed for Chapter 11 bankruptcy protection in November 2022 in the wake of FTX's bankruptcy. BlockFi then began the process of asking the court to allow customer withdrawals that had been locked up on the platform. Now, back in March, FTX reached a settlement with BlockFi, agreeing to pay up to $874 million. Last, a new multi-billion-dollar deal adds to the long list of crypto miners looking to trade Bitcoin for artificial intelligence. Houston-based tech company Lancium and Denver-based Crusoe Energy Systems inked a partnership to build a 200-megawatt data center just outside Abilene, Texas, one that's designed to meet the unique needs of AI companies. It's the first phase of a larger 1.2 gigawatt build-out. And at full capacity, Lancium president Ali Fenn tells CNBC that this will be one of the largest AI data center campuses in the world. Now, miners have been trying to diversify following the Bitcoin halving in April, where the business of generating new tokens has become much less profitable. Mining firms have expansive data centers with access to fiber lines and large amounts of power across the US, which are the kinds of facilities needed for compute-intensive AI operations. All right, sticking with Bitcoin miners and AI for our main story, I spoke with Ryan Condron, CEO of Web3 data routing protocol Lumerin, about the growing trend. He breaks down the role that Bitcoin mining plays in stabilizing power grids strained by AI data centers. So where do things stand right now in regards to Bitcoin mining? We've seen hash rate waver after the halving, but miners haven't really been selling their Bitcoin holdings. And in fact, Glassnode data showed that Bitcoin miner reserves have actually begun ticking up in July. So what do you make of where miners are at this point, a few months post-halving?
Yeah, I mean, since the halving, we saw a bit of a market pullback. So miners are speculating just like everyone else, thinking that as soon as the sideways summer ends, we're going to start seeing uptick in the fall. So you have a lot of miners banking on that.
Okay, so aside from the price of Bitcoin and the hash rate, there's been a narrative shift amongst Bitcoin miners. I just wrote a story about how miners in Texas are pivoting to AI, given that they already have much of the infrastructure in place to make that conversion relatively easily. What do you make of the shift that some miners are making toward this new demand for high power compute?
Yeah, really at the end of the day, miners are profit driven animals. So they're going to go wherever they're going to get paid the most for their electricity, because the reality is electricity is the commodity that miners work with. So if they can get paid more from the Bitcoin network, they're going to mine Bitcoin. If they get paid more by doing AI compute, they're going to do AI compute. The difference is AI compute is very, very expensive to set up for miners. So there is a huge amount of upfront capital cost. So it is a massive commitment. When it comes to power grids, miners can't fully switch over to AI compute because it's not going to allow them to do what's called production following on the power grid. But they can switch over a little bit of their capacity to AI compute to try to get better profitability.
Now, on the flip side of that, some have argued that blockchain and AI could actually work together. There's an argument that some make that blockchain could help with verifying information that these models get wrong. Do you see a merging of those two technologies happening? And are the companies that are building out this high power compute for AI services in the best position to benefit?
Yeah, definitely. So one of the projects we're working on with the Lumerin team is a project called Morpheus, which is all around merging blockchain and AI, where we can have on-chain verifiability for different AI models, where you can have providers anywhere in the world provide anonymous, decentralized compute to AI users. Is really going to be the next frontier for technology with the emergence of crypto and AI coming together.
Now, we've seen M&A and deal making among miners pick up a lot this year. How long do you expect that to continue?
Well, I think we're just starting to see the bloodbath. We're seeing miners are holding off as long as possible. We knew with the halving coming in, people were trying to retool, trying to cut the fat as much as possible, trying to slim up their OPEX. The reality is they're only going to be able to hold off for so long. A lot of miners are actually holding more Bitcoin, as you said earlier, trying to wait for the market to come back up in the fall. If the market comes back up in the fall, then they can sell their Bitcoin at a higher profit and they can stay solvent. If it doesn't come up fast enough, a lot of these miners are going to be going under and they're going to get gobbled up by the large publicly traded miners. Now, the publicly traded miners, because their goal is to just increase revenue regardless of profit, they can actually take a hit on profit by gobbling up these larger or these smaller miners and just continue to grow their revenue. And that's what they're going to do for their shareholders. So I really think more and more acquisitions are going to be happening through the fall and the winter. And it's going to be a bloodbath. I honestly think towards the winter and spring of next year, we are going to see a massive shift in hash rate among the publicly traded miners.
Now, there's also this criticism that mining facilities use a lot of power and AI data centers do too. Do you think that that continues to be a problem within the industry, even if they make the conversion? And how do you think they mitigate those concerns?
Yeah, so Bitcoin miners using a lot of power is actually a good thing for the power grid. It really allows power producers to be able to produce at a more optimized level. And Bitcoin miners can actually counterbalance power producers to balance the grid. AI compute cannot do that. Unfortunately, AI compute is not a flexible load like Bitcoin mining is. So as I said earlier, Bitcoin miners can only adjust so much over to AI compute. Now, what we see with AI compute is like an arms race. So we see Microsoft going into Arizona, trying to buy up a quarter of the nuclear power load in the middle of Arizona. We see a huge amount of AI compute facilities coming online, and it's really anywhere in the world there is enough electricity capacity. We're seeing more and more AI compute centers come in. The problem is they cannot load balance the grid like Bitcoin mining. So really, at the end of the day, if you take a macro level look, Bitcoin mining will be the saving grace of AI compute in the world. And I don't think a lot of people have realized that yet, but it's really the only thing that makes sense.
Now, to change gears before I let you go, we're expecting any day now to get an answer on whether spot Ether ETFs will get approved in the U.S. Some say that the spot Bitcoin ETFs that got approved in January went a long way in terms of legitimizing the technology in the eyes of Wall Street. Do you see that being the case for these products? If they get approved, will they have as much of an impact as the Bitcoin funds?
So Bitcoin on a technology level is actually very, very simple. Ethereum is a lot more complex, and then Solana is even more complex after that. The problem is you have investors that will come in and they want to follow the momentum. So Bitcoin has a ton of momentum. You have a lot of countries adopting it, a lot of large institutions adopting it. So it makes sense for a lot of investors want to get involved with ETFs, even if they don't understand it. Now, when they start moving into Ethereum ETFs, they even understand, they understand it even less than what they understand Bitcoin. So it's really going to be highly speculative. Now, if the SEC wants to approve that, I'm not an expert in that area, but it does seem to be that's where it's going. So whether it be a Ethereum ETF, Solana ETF, we do have a huge amount of education that we need to get out there to investors to understand what they're getting involved in, because it's really, really speculative at this point. What that's going to do for the markets, well, clearly when you have more investors coming in, it's going to drive the prices up, but they're going to be exposed to the volatility of crypto. I mean, I've been in crypto since 2012. A lot of my friends have been in crypto for over a decade now. So we're used to the ups and downs, the volatility. We believe in the technology. We know what's being created and we know the value of it. A lot of these ETF investors don't understand the technology. They don't know what they're investing in. And until they're properly educated, they're not going to see the value. But once that switch is flipped and they see the value, then it's going to be incredible. It's going to be to the moon, I'd imagine.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.